What's up, everyone? I'm Tanner, and this is the Financial Reset, where we talk about money, life, relationships, and everything in between, and all the questionable decisions. This isn't talking about index funds and lattes. I'm here to keep it real. If you got some content ideas, please feel to drop them my way. And now let's get into it. The real question today is, should you hire a CFP? This is the 20-somethings guide to figuring out life. When you're in your 20s, you have some money saved up. Maybe it's in a savings account, and you're getting a whole whopping 1% interest. And suddenly everybody around you is telling you, oh, you got to invest wisely, you got to plan for retirement. Your parents are like, you got to use our guy. Your coworkers are always bragging about their stock picks. You got that one friend who just won't shut up about his compound interest. But here's the $1,000,000 question. What do you do? And a lot of people don't know what to do, like hiring a financial advisor, or maybe should you just YOLO it, take some TikTok advice. Stick around, because I want to break down this for you in the best possible way and figure out if you're willing to go solo, or most importantly, how much it's going to cost you to utilize a financial advisor. So before we dive too deep in, let me just get something clear. I'm not here to sell you anything. I'm not here to scare you into hiring someone. Second, I'm just really not trying to convince you that all financial advisors are evil money grabbers. Though we'll talk about some red flags to avoid. And we are going to go through a pros and cons list about working with somebody who is trained in finances and investments and managing them. And I'm going to try and make this as little boring as possible, so your parents will stop yelling at you about a 401k statement. So, quick disclaimer. This isn't personalized financial advice, just general education. So don't come at me when your meme stock portfolio tanks. So what exactly is a financial advisor? The first thing is, let's clear up some confusion. Financial advisor is somebody that you hire to help give you some guidance on different financial things. Somebody that's a financial advisor has gone through varying levels of coursework. They've taken a test, they've gone through a bunch of education. For somebody that's a CFP, they've gone through a bunch of tests, and it's considered the gold standard in the world. So those people are really designed and have done a lot of coursework to really manage portfolios and figure out how that you should utilize your finances and what specific type of investments you need to dive into. You'll hear about commission-only advisors, that are based or fee-based advisors, and there's a lot of distinctions that actually really matter for your wallet. How your financial advisor or CFP or whatever you're going to use gets paid really matters into the advice that you receive and understanding what's a green flag and what's a red flag. So let's start with it. Why you might want to hire one. I'm just going to give you the real talk, not the marketing fluff or anything like that. First up, it's the expertise, the experience. People literally went to school for this stuff. They passed some difficult exams, and financial planning is part of their everyday life. And while you're busy trying to figure out if you can afford, groceries or rent or trying to make everything work, they're reading the tax codes for fun. It's a really weird flex, but okay. But here's where they really shine. Comprehensive planning. If you get a good one, they don't just pick stocks. They look at your entire financial picture, think about how you can optimize your insurance needs, your estate planning, your retirement projections, your debt management. They're really the Swiss Army knife of money management. For example, they might catch something that you're missing on tax advantage accounts, or you might realize you need disability insurance because your biggest asset is just your ability to earn, and what happens if something happens tomorrow, right? It needs to be covered. But talking about behavioral coaching is also huge. So, the feeling when the market drops 20%, you want to sell everything and then hide under a mattress. Well, or what if GameStop or another stock is mooning and you just want to throw your entire paycheck into it? A CFP is really basically, a financial therapist who helps who helps you preserve, decisions from long-term, preventing long-term wealth. And then the math really gets interesting to show that, a person might spend 5-8 hours a week managing their investments if they're doing it seriously. It's like a few hundred hours a year. So it's kind of a little bit of full-time work, if you're working, a few hours a week. But if you might be better off just paying an advisor. And some people don't think about the liability. So someone that is a fiduciary, has a legal obligation really to act in your best interest. So if they screw up or take illegal investments, there's definitely can be recourse that can happen. But if you just screw up your investments, well, that's really on you. And obviously there's no guarantees to any sort of financial advice, but it can help you avoid making costly mistakes. So I'm talking about things like withdrawal penalties, tax efficient investing, um, you know, planning your estate, insurance. You could be one major mistake away that would offset any major fees. So that's really the case for it. The case against it is actually quite simple. Now, before you start saying, "Oh, I need a financial advisor," let's talk about the downsides, because there's definitely some. Most people that are financial advisors, they charge you a percentage of your assets under management, or like a 0.5 to 2% or more. Some of them have hourly fees, some of them have flat retainers, some of them operate on commission only. And if you've done the math, and you can do that really quickly, you might be paying thousands of dollars if you have a lot of money to get things managed. And it might not make a lot of sense. So you heard that. You could be losing out on a lot of money if you hire a financial advisor. And sometimes there's minimum asset requirements. Many good advisors won't even talk to you if you don't have at least a few $100,000 in investable assets, depending on who they are. If you're just starting out, you might just not even qualify for one. But here's something that really will kind of blow your mind. When you're young and like me, and you have a really simple financial situation, it's not that complicated. The fundamental strategy is really straightforward. People maximizing your 401k match. They maximize tax advantage accounts, Roth IRAs. You invest in index funds there. I did say it. And you rebalance when needed. You don't panic. You don't panic when the market's down. So you've just accomplished really what 80% of people don't get until they're in their 30s, or maybe ever. So the elephant in the room, though, for financial advisors is the conflict of interest. Not all of them are created equal. Some people are like salespeople in disguise. So people that are commission only, they might try to sell you the mutual funds or specific products that really don't make sense for you. It's like going to the car salesman and saying, "Oh, I need a car." And they walk back out with a car that's 10 times what you can afford, and that happens, right? And now 10 times is a little bit extreme, but there's an issue there. So there's also a control issue sometimes. Some people really just genuinely like learning about money and finance and how to do things. If you're the type of person who likes to read financial statements, they get excited about reading ratios and DIY stuff. It might be more up your speed. Plus, you'll actually understand what's going on with your money instead of just blindly trusting somebody else. And that's really the case against it. It's, like I said, not all the people that are financial advisors, CFPs, whatever their designation is, are good. Some of them are completely trash. Some of them are really, really good. A bad CFP or financial advisor can be worse than none. They might have high fees for generic advice, or something that you could have gotten advice from otherwise. But when does it really make sense? So it might make sense when you have some really specific scenarios. You have a lot of money you're trying to figure out. You have a really complex situation. So like, you could be self-employed and have multiple income streams, or maybe you're dealing with employee stock options that you just don't know how to handle. Tax optimization can be huge. That might save you advisor costs. Maybe you've experienced a really major life event, inheritance, divorce, job loss, disability, or getting married. There's a lot of financial situations that are complicated to manage. And being completely overwhelmed and doing nothing is not the right answer. So it's huge if you get analysis paralysis to maybe have somebody. But you also may be infinitely better just getting started on your own, right? Keeping things simple, starting investing. If you have a really high income and a complex lifestyle, like you're a doctor or something like that, or a tech worker with stock options, it might make a lot of sense. If you're approaching a major milestone, or having kids within 10 years, and need to get serious about planning, those are also really important. Like maybe you're approaching a major financial milestone, like potentially buying a house, or you're having kids, within 10 to 15 years of retirement, and you need to get really serious about planning. Those are the times when it makes sense. The middle ground and the alternatives, that's really what's important, and that's kind of what I'm all about. So my take, my current situations, it cannot necessarily be either or. There's actually a sweet middle ground that might work really perfectly. And there's several alternatives out there that you can get, good advice at a kind of a lower cost. And the hybrid approach is like, you got to educate yourself first. So you got to handle your basics. You got to set up your 401k. You got to open your Roth IRA. You got to invest in some funds that are stable. You got to get comfortable with the fundamentals. You got to actually do the research. There's a lot of great resources and books out there. There's podcasts, investing videos, and yes, there is occasionally some good YouTubes. But then as your situation gets more complex, that's when it might make sense to bring in a professional, right? So you could use a fee-only person, for one-time consultancy. Some of them are really good. You might pay a couple $1,000s, but just to review your plan and give you guidance, but it could pay off way more than paying someone hundreds of thousands of dollars over the life of your money. There's also robo advisors. This is something that I'm really heavy with because I enjoy having control, but I also enjoy giving some advice, like Wealthfront or Vanguard or Voya or even Charles Schwab, things like that handle management at a fraction of a cost. A lot of them handle things like asset allocation, rebalancing, tax loss harvesting, and some of them even will offer you advice via human advisors if you subscribe to a premium plan. These people may be hourly only, and maybe they don't manage your specific money, but they can help review your portfolio and see if it actually makes sense. And then with all the information that you learned, you can actually make the decision. And your employer usually has a lot of benefits as well. So many companies actually offer a lot of 401k counseling, Roth counseling, different stuff like that. But then if you still don't know, you know what? Reach out to my inbox. Let's have a conversation. Let's figure out what maybe makes sense for you. So before we wrap up, let's just really talk about red flags. And this is what's important to me. You want to run away from somebody that is trying to cold call you or promising you guaranteed returns. Legitimate CFPs don't work that way, or legitimate financial advisors don't work out there that way. If someone's calling you, talking about expensive insurance products or complex investments that you can't even begin to understand or even actually research, especially some forms of life insurance, which don't make any sense when you're young and single, you got to avoid advisors who don't have your best interests at heart. You got to ask them, are they required to act in your best interest? What kind of investments are they putting your money in? You need to ask all of these questions to really have a transparent conversation about risk tolerance and financial situation. Good planning requires knowing the person, not just your account balance. So what's the bottom line? The bottom line is if you're in your 20s, or could be even in your 30s sometimes, in your relatively simple financial situation, you have no debt, maybe a student loan or something like that, just start doing the research and start investing any way possible. Consistent saving, low cost investing, and not freaking out is huge. But if your life is getting a little bit complicated, you have major events coming up, maybe you're going to inherit something from your family and you're not sure how to handle it. Having a sit down with somebody who's actually qualified to deal with it can make all the worth in the world. And remember, the best investment strategy is always the one you stick with. So whether that's working with a professional, you do DIY it, or maybe you hire a team, or maybe you hire, a fee advisor or something. Those are always things that are important to get started. And if I helped you out, feel to reach out. If you have questions, again, comment below, smash that like button, subscribe, and you know what? I'll be back next week for more content because you know what? I'm not going to put you to sleep. I'm just here to educate you.